All right, traders, within this video, I'm going to be sharing you how to trade the best setups at the best prices. We're going to be breaking down the SPY for tomorrow. Fridays are known for being my best trading days of the week. With that being said, we are trading at some phenomenal levels for puts, and there's a lot of daily candles that are looking very, very bearish at key resistance. I am going to show you how to trade the best setups at the best prices. Towards the end, I'm going to be sharing with you some of the game plan for the small account challenge. We're going to be going over the small account challenge towards the end of this video. Let's get straight into it. So first things first, let's start off with the SPY. So in terms of the SPY, what I want you to understand is heading into tomorrow, we're going to have key make it or break it levels, and these are going to be those key levels. I want you to write these levels down. $420. It closed at $419.99, so previous closing price we'll say is $420. Nice key whole round number. That is going to be basically the make it or break it level for the SPY tomorrow. If it cracks and reacts as a resistance level, you're going to want to play puts when it shoots back up to 420, right? So that's what we're looking for. We're looking for a breakdown of 420 to react as a resistance level. If it does crack $420, the next level on the SPY is going to be overall. I mean, you can say there's some support right here. But yeah, this is going to be it. It's going to be $419. So all of these lines, so the previous closing price, this should key make it or break it level. $419, that's your next key make it or break it level. If 419 cracks, let's change this to the 30-minute chart here just to get a better perspective of levels. So if 419 cracks, then we are super bearish for tomorrow. To go super bearish tomorrow, 419 must crack. It must turn into resistance level. If that does occur, the next level is going to be 418.40. And then if that occurs, your next level is going to be 416.70. So I want to bring awareness to all of this. These are going to be your key make it or break it levels. What I want you to understand is on the daily chart with the SPY, this is not bullish in terms of the micro. This is overall bearish. Now, I will say this. We still have a gap to fill above at 429.06. There's a gap to fill at 429.06. SPY has been trying to fill this gap. SPY has been turning this key level 417.44 into a support level, which is bullish for the overall trend, and it's been trying to climb up to fill this gap. The best level possible to play puts on is 429.06. Set your price alert there, and if you ever see the SPY hit this level and it forms a bearish candlestick on the daily, that is when you swing trade the puts. If you want to swing trade the puts for the best confirmation, wait for the gap to fill, and if it closes weak, if it forms a pin, if it does not close strong, you're not going to know until the last 5 minutes to the close. So you wait to the close, and if it forms a bearish candlestick at this gap fill level, swing trade puts. That is where I will hit it heavy for a swing trade, right? So we're in the middle of the channel right now. We're in the middle of the channel. The bulls have been consistently trying to fill the gap. The bulls have been consistently trying, they've been consistently turning key support, key resistance levels, right? They turn the key resistance level, the top of this channel right here at 417.44 into a support level. Therefore, it's going to rocket back to the next level on the daily. And the next level on the daily, if you look right here, it was overall, if we break above 417, your next level on the daily is right around here, the high of this candle, which is 423 to right here, 425. 425 was the make it or break it resistance level. See how it crashed at 425? See how it crashed at 425? See how it's already crashing at 425 and that history is repeating itself? That's the make it or break it level. If you see that react as a resistance on the daily, you play and scalp puts. If it breaks down and reacts to support, then it rockets to fill the gap, and that is where you play and scalp puts again. So in terms of history, what we are currently seeing is we are seeing a top out at 425, 425. Okay, so what happens the next day? In terms of the next day, on this day, it crashed all the way to 405. I don't think it's going to go that low. So, you know, it dropped from 426 all the way to 411. And then the next day it sold off more. You could see right here, it closed at 414. And then the next day it dropped to 405. And then it recovered. So you have to lock in profits and take your gains, right? Because it recovered, right? In terms of the micro, these are quick laser scalps. So the point being is, in terms of the validation that we are getting for the SPY, we are getting bearish confirmations. It hit 425. It failed to turn it into a support. If it reacts bearish, history shows that overall it does go lower the next day, and then it could rocket back up. Overall, it does go lower the next day, then it could rocket back up. It failed to turn 425 into support. If 425 ever breaks out and reacts to support, the best level for puts from there is 429.06. Use these levels, use these price actions. If it reacts bearish at those key levels, wait for it to go back to the key level and play the puts. So what are going to be our key levels for tomorrow? Very, very simple stuff. 420. 420 is our key make it or break it level. If it holds, we wait to buy puts at a better price. And that better price will be at like 425. So 425 is your key make it or break it level. That's where we're looking to scalp puts on a key breakdown. If it cracks 420, it goes to 419. If 419 cracks, it goes to 418.30. If 418.30 cracks, it goes to 416.87. Now, let's talk call talk. In terms of call talk, based off of the history and based off of the daily chart, we could recover throughout the day. So what are the best levels to potentially buy calls tomorrow? What is going to be the best level for tomorrow to buy calls for a scalp, if that's something you wanted to do, right? This will truly be your best overall level. It's going to be right here, $416.80. This is your best support level possible. If you're buying calls, this is where you would want to buy calls for a quick in and out scalp. Let me explain to you why. This is key support with big upside potential. And what I want you to understand is save this level. This is a make it or break it level right here. This is what we call an overreaction. CPI data was released here at 8:30 a.m. And you can see right here, SPY is held up on thin air. It is held up on thin air. There is no support once 416.45 to 416.80, 416.45. If this cracks and reacts as a resistance, your next consolidation level, your next support level is at 413. That's a massive profit margin. So in terms of scalping and key breakdowns, you need to pay attention to levels where you can win big. If you see this crack and it looks bearish, wait for it to go back up and form that lower high and turn that previous support into resistance, and then look at all of your profit margin. Your profit margin is all the way down here at the next support level, the next consolidation level. Not all charts are created equally. You must pay attention to key levels that have overreactions, that have big upside potential or big downside potential. If this level holds, it has a little nice upside potential. If this level cracks, it's got some big downside potential. Pay attention to the key make it or break it levels. Wait for the confirmation, wait for the reaction, identify. Does this look like support or does this look like resistance? Is it holding? Is it forming support? Is it forming dojis? Is it forming bottom wicks? Or is it cracking? Is it forming lower highs? Is it forming a roof? Is it forming a resistance? Or is it forming a floor? Once you've determined what it is doing, you wait for it to retrace back to that best price so you get the best entry. You buy the calls on the red candle and you buy the puts on the green candle. You wait for the confirmation, you wait for the reaction, and then you wait for it to retrace back to that level. What do I mean by that? This is what I mean by that. We knew on the daily, in terms of the SPY, that 425 was a key level of resistance, right here towards 425. So if the SPY rejects 425 and sells off, that's bearish. So what do we do in that situation? Well, if it pops back up, we buy the puts on this green candle on the top of this pop. It's already confirmed bearish. It's already forming lower highs. It's already breaking down. Wait for previous support to react as a resistance. Wait for the back side of the move. This is a perfect example of the back side of the move. Your support right here cracked and it reacts as a resistance. Buy puts into the lower high. Buy puts into lower high. Should be buying here as well. Those are all confirmations that this is the back side of the move. Do that at key levels of interest with big downside potential on puts and big upside potential on calls. This is what you want to be focusing on. Now, let's go over to stocks. Roku. Roku looks bearish. We got a very bearish wick here at the daily. It looks overall bearish. This is what I want you to understand. Roku is at a make it or break it level. If you see this level, 80.65, react as a resistance level. See how it's trying to break down, it's trying to turn it into a roof, it's trying to crack. That's bearish. If it reacts that way tomorrow, scalp puts on Roku towards that previous closing price. If it reacts bearish, it has to react bearish. If it does, you wait for it to pop back up, buy puts on the pop, and use your tight stop, right? That's what you want to do in terms of Roku. We're looking for this key support level right here to react as a resistance level, this level and this previous closing price. If it does, and you see the bearish reaction, it must have a bearish confirmation, it must have a bearish reaction. I am not telling you to play puts at these levels. I am telling you we are interested in puts at these levels, but it must react bearish. We must get confirmation. And then once we get that confirmation, we must wait for it to retrace back to that price where we were interested in getting in at. It's trading in a confirmed passion. We wait for confirmation, and then we wait for it to go back up to that price. And when everyone's scared and they're all getting stopped out, that's when we buy the puts, when it's already confirmed. We're not worried about that. We're getting the best entries possible, right? So you need to understand, these are key make it or break it levels. If Roku breaks above 81.50 and turns into support, look at your upside potential. You don't play at these levels. You get stopped out fairly quickly, and you scale in accordingly, and you wait for the backside of the move. You wait for the bearish confirmations. You wait for lower highs to turn into, you wait for previous supports to turn into resistance, right? Because if the trend flips at these levels, you do not want to be in against the trend. Right now, it is showing signs that the trend is bearish, but that can flip. So if it flip-flops, you get stopped out, and if you like, you can switch sides. Just because I get stopped down, the trend flips does not mean I switch sides. I have a very certain set of criteria for me to switch sides. It has to have a big move in my favor. It has to be worth taking the trade. If I'm overall bearish, I'm going to try to avoid switching sides, even if it looks bullish for the micro, right? So DraftKings. DraftKings is looking pretty bearish. You know, this candlestick right here, this candlestick right here, when it forms this bearish candlestick on the daily, it tends to sell off the next day. It's at very key major resistance. There's multiple gaps to fill below, and it triggered dark blue on the squeeze indicator. When this triggers dark blue on the squeeze indicator, it tends to be a good confirmation of a sell-off is coming when it's at resistance. So DraftKings is looking pretty bearish. Heading into tomorrow, what are we looking for? We're focused on the previous closing price. This is what we're focused on. We're focused on these closing price where it's previously closing at, right? So previous closing price, this is what we're going to be focusing on. So where is it closing at? It is closing at right here, 1935. Where did Roku's previous closing price hit? Right here, $81.08. We're looking to identify if these previous closing prices are floors or are resistance. Based off of the daily chart, everything is showing signs of weakness and everything is showing signs of a further pullback for the micro, and then we could flip later, which is why I'm put option focused. That doesn't mean I'm buying puts at these prices. I need the bearish reaction. I need the bearish confirmation. If I get the confirmation, I wait for it to retrace back to the price. That is the game, okay? We're not trading purely based off of a price. We're waiting for the confirmation at that price, and then when we get the confirmation, then we enter the trade when it retraces back. Okay, so Roblox. Roblox is super bearish. I'm going to be very blunt about this. Whenever Roblox is trading at key resistance and it forms this top wick, this is what I'm talking about. Go and study the daily chart. Study the daily chart of Roblox and see for yourself what happens the next day when Roblox forms a top wick like this at resistance. Well, this is a top wick at resistance. This is a top wick at resistance. See how the wick is at the top? This is a top wick at resistance, a top wick at resistance, a top wick at resistance. What does it tend to do, a top wick at resistance? It tends to drop the next day. You see why I'm leaning overall bearish for next day on a lot of these, because the pattern shows, the chart shows, the daily candles showing what can potentially happen. All we have to do is confirm if it's resistance at the previous closing price. Once we confirm it, we wait for it to retrace back up to the previous closing price. Very, very simple stuff. So 49.56. 49.56 is going to be the closing price. I have to fix this. I'm not sure why it's showing $48.01. That is not accurate. It's 49.56. I changed some things to my charts, so that is something I have to fix with the indicator right now. But it's 49.56. 49.56 is the make it or break it level. DraftKings, it is 18.54. It's not 19.35. My apologies on that. And Roku, it is 80.65. So you can ignore these white lines for just for today. I'm going to get this fixed. Meta, in terms of Meta stock, This is super bearish. It's looking pretty bearish here. It's at the top of the resistance. It closed the gap. Like I tell you guys, when you see a stock close the gap at the top of the channel and form a red bearish candlestick, that is confirmation to swing. Those confirmations aren't determined until the last 5 minutes of close. So what I'm basically telling you is there was confirmation a swing trade made of puts. So if you took advantage of it, congratulations. It looks bearish. It looks something like this, where it's going to continue to sell off. And it's at a better key resistance level. It closed the gap. It closed weak. It formed the bearish candlestick. For those of you who are asking me about swing trades, I wait until the close. I wait. It's based off of a daily candle. I look at the daily candle. I see how the chart reacts when it forms that daily candle, and I look for it to be at the best levels, the best resistance level for puts, the best support level for calls. And I look at the gaps. Did it fill a gap? Is it showing signs of a reversal? Yes, it is. That's what I'm doing with swing trades. They are not determined until the close. So do not ask me early in the day, is this a swing trade? We have to wait until the close. You can have things on your radar for swing trades, but they are not determined until the daily candle closes, because the market can flip-flop. Everything can flip-flop during the day. Okay, so swing trades, our results are determined the next day. We enter right before the close. The day we enter has no impact on us. And then next day, that's where our results are. Very quick, in and out. We're not holding these. We're not holding these long, in and out. This is a long. Let's go over this PBR. Again, super bearish. It nearly filled the gap. What I disliked about it is it did not fill the gap. But when it forms this candlestick on the daily at key resistance, this big red bar, it tends to sell off. Big red bar tends to sell off. I want you to keep puts on your radar for this one. It looks overall bearish. We finally cracked some key major support. That key support was at $15.30. It's now turned into a new lower high, new resistance level. For this one, we're looking for $15.09 for a break under $15 to scalp puts. GOOG, Alphabet Inc. This is another one that is looking fairly bearish. And remember, we're getting in, we're getting out. We're going with the closest expiration typically. If that's too quick for you, go with like a 1 or 2 day. And we're aiming for a quick 10 to 20%. Scalp like a sniper, in and out. That's how I'm trading these, man. I'm not holding these too long. Certain trades are meant to be held. That's a different style. And in terms of that style, that requires a further expiration. You need to be going with a 2-day plus expiration if you are trying to hold longer. And the strikes are the same. The strikes are always the same in terms of the way I trade. It's at the money. It's basically at the money, barely out of the money, or basically in the money. It's basically the strike price I select is the one closest to the stock price. So if this is at 119.82 and I'm buying puts, I'm probably going with the 120 in the money strike. If this is at 119.40 and I'm buying puts, I'm probably going with the 119 strike, right? So I'm trying to go with the one closest to at the money, pretty much at the money, in the money, slightly out of money. You know what I mean? So this is another one that and for GOOG, for this one, like I said, you're gonna want to look for puts at 119.82. 120, you see that react as a resistance. You're gonna want to play puts, right? So we gotta wait for the bearish confirmations on all these. Star, so this is a long-term alert, right? And for Meta, this is bearish, right? So for this one, if we see 177.50 react as a resistance, that's where we play the puts. 177.50 if it reacts as a resistance. What I have noticed, and you can do this by studying the daily, what I have noticed on Meta stock is when it forms this candle at resistance, it tends to have a small move up, then it tanks. That's what I've noticed. I've been studying the daily on this one. It can have a small pop up before tanking. So in terms of that small pop up, what would we want to be looking for? I would say right around here at 170. What is this? 179 for puts. If it has that small pull up, if it's looking bullish, like that 179.50, 179 level range for puts on Meta. Star. It's a long-term alert. Set a price alert on this one. It should be an okay one. 1708. There's a gap to fill at 1708. Once that gap fills, reacts as a resistance, you're going to want to scalp puts. So that's the game, guys. Those are the best setups. Those are the best prices. Those are my key levels that I'm currently interested heading into tomorrow. And that's the game. So in terms of SPY, if breaks down 420, we play puts. It looks bearish. If not, we're going to wait towards 425. That'd be the key make and break level for that. And then key level for calls, levels of interest, is going to be, like I said, your best level possible. 416.45, 416.80. Save that level. It's going to get crazy. Whether it's tomorrow, whether it's next week, save that level. It's make it or break it. Held up on thin air. Going to be very interesting to see how it reacts. Trade at the make it or break it levels. Trade at the best levels possible. What are the best levels for SPY? 420, 425, 425, best level for puts for tomorrow. 420, key make it or break it level. 416, key make it or break it level. Likely micro scalp on calls. If it cracks reacts to resistance, switch and flip to puts. This is simple. You get in, goes against you at a key make it or break it level, you get out, and you could switch sides. In not all cases, I'm switching sides. With that being said, if you do want to be a part of Trader Society, it's going to be the first link down below in the description. You get to watch me trade live every single day at market open. It is time to take this small account challenge to the next level and to take it seriously. I'm going to be making a video later this weekend going over the details, the entire game plan, going over the platform, basically going over everything in terms of what I'm planning to do with this small account challenge. I'm going to make it very quick now. This is just a very quick little summary. I'm going to make a whole video dedicated to this. But in terms of the small account challenge, I want to be fully transparent like I have been. I'm posting the results every single day. I haven't been uploading because of COVID. I'm starting to feel a little bit better. Hopefully it doesn't come back tomorrow. And I've been having some trouble sleeping. I have so many ideas and so much going on in my mind, so many thoughts, so many ideas. It doesn't turn off. It's very hard to get sleep nowadays. But with that being said, the portfolio had the great reset. I call this the great reset because I broke my rules and I did things that I was not supposed to do. And if you do that, you will experience this big loss. You will experience great resets. So at the peak, it hit $10,000. I ended up full porting, breaking my rules, putting the entire account into same-day expirations. Extremely highly risky, especially if you don't scalp it. And I held them. I did not scalp it. I held them, and I put in the entire cash account. So I'm used to trading a margin account. There is different rules to trading a margin account. There's a lot of advantages. If you're a professional trader, a cash account will truly limit you. It will screw you over. There's so many flaws to a cash account. But if you want to grow a small account, you have to use a cash account. There's no other way. You don't want to use margin and have 3 trades every 5 days. You don't want to do that. If you have under 25K, I'm doing this for the members within Trader Society, you need to use a cash account, and it needs to be with either Webull or Thinkorswim because of their platforms. The platforms are set up for you to succeed. So what I'm telling you is, I gave them everything. I went against the plan. I broke the rules. It happens, right? With that being said, so why did this happen? Why did this occur? Why did this massive loss occur? I call it the Great Reset because it brought the account balance back to where it started. On July 18th, it started at $3,941. The portfolio is now up. I had a green day today. The portfolio is now up $4,040. Portfolio is up 1.51% on the day, 3% on the total right now. So how can we prevent these big losses from occurring, right? How can we prevent a big loss occurring when we're going with a close expiration, when we're going with a same day expiration, when we're going with a next day expiration, the very volatile ones, right? How do we, if we're going to trade these and scout these, how do we prevent big losses? Do not size, and this is for cash accounts. This is for cash accounts. The rules are different and things change if you have a margin account with unlimited day trades above 25K. Things are going to change when I take this account to the margin account. These are the rules right now, and they will be tweaked as the account grows. Here's the rules. Do not size in big. Do not size in big on the trade. You need to let the percentage gains do the work for you. If you put in a 10% position size, if you put in a 20% position size, you put in 20% of your account into a same-day expiration, these contracts are going to move like 10% within minutes, within like a couple minutes, right? You make a 10% return on a 20% position size of your account, that's a 2% return. You do this rinse and repeat, say you're sizing in at 20%, that's 5 trades per day with your cash account. If you're sizing in 10%, that's 10 trades per day with your cash account, right? With that being said, if you compound the account, say you're starting with $4,000 and you're growing at 3% daily, that's your average, right? Some days are going to be bigger green days, and then some days the green days are going to be about 2%. And then on red days, we're trying our best to keep our red days under that like 3% threshold. But if you were to start with 4K and you made a 3% average return daily, that means average, some days bigger, some days less, like I said, for the next 5 months, if you consistently did this every single business day on an average, not including weekends, it would turn into $100,000. It's going to be a small account challenge where we compound the account. We're going to compound this account. We're going to start small. As you can see, if we look at the, daily chart, the earnings aren't substantial at first. You're not going to be making a bunch of money at first. And I want to be very clear. Whether I'm making thousands of dollars a day, whether I'm making $100 a day, thousands of dollars a day, tens of thousands of dollars a day, there is zero emotional connection or attachment to the money. I will not be impacted by my earnings in terms of how I trade emotionally. It has no impact for me. There's people looking at this and they're saying, oh my gosh, this is only $61. I'm not looking at the $61. I am all focused on the percentage. I'm trading in percentages. I'm situated where I have no emotional connection or attachment to this money, but I'm going to make sure that I try my best to keep this money and that I compound this account gradually. The way the compounding is going to work is it starts off very flat and then it slowly rises. And if you are consistent for about 6 months, the chart's going to go like this. It's just going to keep shooting up. It's going to be unbelievable. If you are consistent every single day, every single week, you will be getting a raise. You'll be getting a raise. Let me show you what I'm talking about. Okay, so right now, if I make a 3% return, that's $120 a day. What if I'm consistently doing this for the next month? I'm consistently doing this for the next month. Let's go to September. Wow, I got a raise to $200. I'm now making $200 a day. There's no other job in the world where you can get this kind of raise with your consistency. What are you going to do? Work a 9 to 5 and ask your boss for a 30-cent raise, $1 raise? That's not going to change your life. You can compound this way and get an $80 raise. And like I said, if you keep the money in and continue to compound it, the raise is going to get crazy. And I would not take any money out. I would not take any money out. I would do this consistently for at least a year, man. At least get to multiple 6 figures before you start taking money out. I would not take any money out. Like, I get, if you need bills and there's stuff that needs to be paid and stuff like that, you should have other sources of income. But with 3 months of consistency with this, if you need to, you can start taking some money out, but you got to be frugal. You got to be saving your money. Don't be buying stupid things. Keep compounding the account. Only take some money out if you truly need it, but you shouldn't be relying on trading right now if you're starting a small account to need that money. The purpose of this should be to keep the money in. It's going to change your life, not right away, but within a year. Look at this, months, $20,000 a month, $40,000 a month. And if you just keep on doing this, I'm telling you, it gets crazy. Look, that's 5 months. We go to 12 months. Look at the results now, 8.9 million. Now, obviously, once it becomes a margin account, there's going to be tweaks. There's going to be changes. But if you know what you're doing with the margin account when you are above 25K, trading is going to become so much easier. It's a double-edged sword. If you know what you're doing, it's going to become a lot easier. It's not going to hold you back from your full potential. It's going to allow you to have the freedom to do what you want whenever you want. Unlike with a cash account, I was trying to trade more and I would have made a lot more money on the cash account today. But unfortunately, I ran out of cash. I made 5 trades. I was trying to make a 6th trade. It would have worked phenomenally. Wasn't able to do it because I ran out of cash. What's the solution? Take smaller position sizes. If I wanted to, I could take a 10% position size. 10% position size, 10 trades a day. 20% position size, 5 trades a day. That's on me. You need to understand. At first, you need to start, it starts small. Start small first. It leads up to exponential results. And as the account grows, you can lower this. If you don't want to make 3%, you can lower it to 2%. I would aim for at least 2% minimum. There you go, 2%, 700K. And like I said, it just takes time. Change it to 24 months. You can see the results. I'm just showing you. I'm just trying to show you and inspire you. And I'm trying to show you this is the way. The way is not to full port. This is the way to compound your account gradually. I want to show you these numbers. You can go on the calculator site, become obsessed with it. And as you're growing this account, you need to continue to make tweaks to strategy, continue to perfect it. It's going to put you in a situation where you're in this for the long haul. You're in this for the long haul. 1 year of consistency could change your life. I'm telling you. So with that being said, how can we prevent big losses? Do not size in big on the trade. Let the percentage gains of the trade do the work for you. You put in 10% of your account, make a 20% return on contracts. That's 2% return on your portfolio. We are not risking everything we put into the contracts. Just because I put 10% of my account into a trade does not mean I'm risking 10% of my trade. The max loss on these contracts is going to be 20 to 30%. I'm aiming for quick 10 to 20% returns, scalping like a sniper, sometimes 30%. In and out. Same day expirations, sometimes 1 day expirations. If I'm entering a trade where I do want to hold it longer, the expiration must be past 2 days. That's the difference. If I do want to hold a little bit longer, it must be a further expiration. What I do best is scalp like a sniper. I get in, I get out within minutes. And in terms of sizing, I'm leaning a little bit more towards a 1 day expiration. Instead of a same day, I would recommend a 1 day for most people. And sometimes I'm going to do a same day, sometimes I'm going to do a 1 day. In terms of same day expirations, those I will scale into. I will not put in the entire position right away. I will size in slightly less, probably 10% to 15%, because they're extremely volatile and not as easy, but they are great for scalping. In terms of 1 day expirations, I will size slightly bigger, and I will not scale in on those right away either. I scale in quickly, but not right away. I don't want to put in complete. If I'm doing a 20% position size, I don't want to take it all at once. I want to scale into it. If it's slightly below my initial entry, I want to start scaling into it if it looks still bearish, right? If it's slightly at my entry or slightly, I'm up and it's slightly in the green and it's looking pretty bearish, I'll add more there too. But I typically add when I'm slightly down and it looks like it's going to appear to be in my favor. That's where I'll typically scale in, right? And in terms of the scaling, it's minimum 10 same day expirations, 6 to 10% of the portfolio, first position size. Scale in the rest, 15% max. In terms of next day expiration, 1 day expiration, 10% minimum, and then 20% max. Take the 10% at first, and then I start scaling in 15, 20% from there. That's how I do this, right? How can we prevent big losses with the strategy of scalping with close expirations like a sniper? So we cannot hold for a long period of time. The trade must be made within minutes. We cannot hold these for a long period of time. If you are wrong, you must get out very, very quickly. We must let theta decay not affect us for a quick scalp. If the same day expirations are just too much for you and they're not working out, go with a 1 day expiration. If you're trying to hold for a bigger win, in terms of holding, one way to determine should I hold a trade longer is if it's at the greatest price possible. If SPY goes to 416.80, that's an area to hold for a little bit. If SPY goes to 425, that's an area to hold for a little bit. If SPY goes to 420, that's the middle. That's not the best area to be holding. Holding for me is typically determined at the best levels possible. If it is at the greatest level possible, then yeah, hold, aim for a slightly bigger win. It makes sense to hold longer, but you must go with a 2 day plus expiration. Do not hold same day expirations. What I do best is scalp. If I do want to enter a rare occasion trade that comes around 2 to 3 times a week, I must have the ability to understand that, okay, I need to go with a 2 day expiration. If I try to hold the same day expiration, I'm going to fuck up the trade. It's extremely hard to do that. So that's something that I need to understand. If I break those rules and commingle the trading styles, that right there puts me in a position to fail. So if you're going to do 2 different styles, you must understand the differences of each style. That's where it can complicate things. Now let's get back into this. So this is what we need to be focusing on. Identifying the best setup at the best price. Is this trade I'm about to make going to be a trade where I hold? In terms of if I'm going to hold this trade, those trades are typically prepared much further in advance. Typically the night before or in the pre-market, they have some preparation behind them and they have price alerts created behind them. If it's a trade where I want to hold a little bit longer, I need to be going with a 2 day expiration, right? If this is a trade that has less preparation, if this is a trade that is not truly at the best price, if this is a trade where I want to get in out within minutes, like I do in terms of sniping, if I want to snipe, I need to get in and out within minutes. I need to go with a closer expiration, like a 1 day expiration. If a same day is too much, go with the 1 day. And you have to trade slightly different between a same day and 1 day. It gets like I said, with the position size and its scaling. Once the alert triggers, so like I said, identify the best setup at the best price to trade at, set a price alert. Once the alert triggers, wait for the stock to react. Wait for it to form a confirmation. If the stock is trading at the best setup at the best price possible and you see it react and form a confirmation, right? So if you want to buy puts because it's a bearish setup and it reacts bearish. It's forming resistance. It's forming lower highs. It's the backside of the move. It's turning previous points of resistance, right? You get the bearish confirmations. Wait for it to go back up a little bit towards that entry you were interested at, and then just play the puts into those green candles, into the green candles after the confirmation, not the red candles where you get squeezed and stop out. The green candles, the best entries, right? It's gonna feel a little bit weird at first. It's gonna be weird. It's gonna be weird when you know, okay, 425 is a bearish level. Wow, this just dropped from 425. It looks so bearish here. Let me buy puts on the dip at 424. Boom, it spikes. You're freaking out. You're down on the expirations. You're so pissed off. If you would have just waited for it to pop back up on that double top, or if you would have waited for previous support right here to react as a resistance level right here for the back side of the move, this is where you add. This is where you get in on the double top. This is when you become confident. If you want, you could just trade this. When previous support reacts as a resistance, that's confirmation that this is a very bearish move, right? So remember, bearish confirmation, don't buy puts. Wait for it to rip back up. When it rips back up and the candle looks green and everybody's getting stopped out of their puts and bulls are saying, oh, breakout, that's when you buy the puts. It's going to feel weird. It's going to feel weird, buying puts here instead of buying puts here. It's going to feel weird. Most people, they identify the resistance level on the daily or wherever. They see a rejection. They buy puts into the rejection. They get squeezed, and then it tanks, and they get all pissed off because they got stopped out. You need to be buying them at the best levels possible, but not at the first confirmation and reaction. You wait for the first confirmation. You wait for the bearish reaction. Then you wait for it to go back up and buy puts into the bullish reaction on the retest. You can also, and this is the best thing to do, wait for the back side of the move. The back side of the move is when SPY forms lower highs. It forms lower highs. It turns previous support into resistance at that key resistance level. That's when you start scaling into puts. So there you go. I'm putting you on to the game. This is how you got to do it. If you do it this way, your entries are going to be unbelievable. This is how you got to do it. The big percentage returns aren't necessarily in big moves. They're in amazing entries. You know, if you think about it, if I'm doing the same day expiration here, this $1 little spike, that's like a 30% move. You're down 30%. But if I bought it right here, I'm already up 30%. I could just sell right here if I wanted to. I don't have to hold this. I could just get out right here, make my 30%, call it for the day. Some trades are meant to be held longer, but you do want to always be taking profits quickly along the way. What I do best is scalp like a sniper. There is no such thing as selling too early. If I buy a put on the top of this candle and I get out right here, that is a big win. There is no such thing as, oh, I should have held. Oh, I should have sold too soon. What you can do is you can determine on certain trades where it makes sense to hold a little bit longer. But even if you are doing that, you need to be scaling out quickly, like 60 to 70% of your position size. And then you need to protect the profits. If it's forming green candles, if it's failing to turn previous points of resistance, you need to scale out of that trade quickly. Do not aim for these big wins. What you should be aiming for is consistent compounded returns. You know, there's a student, he has a small account. It was at like $2,500. He made like a 3% return. He made like a 3% return. He made a $75 profit. He said, yeah, guys, I know it's small. That is not small. That is not small. If you do what I'm showing you right here. Let's do 3% at 6 months. That is not a small gain. Now, dollar-wise, people may look at that and they may say, oh, that's a small gain. If you consistently compound the account and you are consistently getting those returns, you have a nice win rate, you're getting these green days coming in, it is going to compound. 3%, $4,000. Boom, starts off with $120 on day one. If you're consistently doing it, look at what it's going to look like. By the end of this 6-month period of consistency, you could be making $20,000 a week. So you have to understand, like, just look at how it compounds. You see how it compounds? Those aren't small gains. A 3% return on your portfolio is fucking insane. That's what you need to understand. Remove the dollars and focus on the percentages. We are going to be doing something that nobody else is doing. Nobody's doing this. Nobody's doing a small account challenge with options, with a cash account, where you consistently compound it with base hits. There is no big wins. There is no fucking big wins. We're not holding for long periods of time. Now, there will be trades where we do aim for slightly bigger wins. But that's not what I do best. But we're gonna do that as well. If it's at a key level where it's just like an unheard of level, we will be doing that. But vast majority of trades are laser scalps. Go all in on what you do best. What I do best is scalp like a sniper. That's what I do best. And I'm telling you, this portfolio, it's gonna be booming. In terms of today, I was 3 out of 5 for scalping. It was at 2.5% at the peak. I played calls. I'm not the greatest at calls. I'm the best at puts. That's what I do best. I played calls. The calls were losers. I cut the losers quick. There was at one point where I bought a put. I bought a call on SPY when it was at right here. I bought a call on SPY when it was at 420, 120. You're probably thinking, oh man, you must have had a big loss with that close expiration. I got out right here before it tanked. Why'd I get out? Lower high, red candle, trend reversal candle, previous supports, now resistance, that's bearish. And then guess what I did as soon as I got out? I bought puts and I fucking banked. So that's what you could do. You could switch sides like a boss. And you get stopped out extremely quickly. You switch sides. Why would I hold a loser when I could cut the loser? And if I wanted to, not in all cases, but if I wanted to, I could just switch sides and make it all back like that. And I'm telling you, with what I have with sizing is a big edge. You know, I lose on a 10%. I put in 10% size. I take a loss. I could scale that to 15%. That's a 50% bigger position size. Lose on that. I could scale it to 20%. There's a lot of tricks I can do with risk management and keeping it small. The biggest disadvantage with this cash count for me is not being able to trade as many times as I want and not being able to size in as big as I want. If I had a margin account, if I had a larger account, I'd probably be taking bigger sizes, but it's not needed to. You don't need to take bigger position sizes. Bigger position sizes and holding big position sizes are what creates losses. 3 things can create massive losses with options: holding options, big position sizes, going far out of the money, going with close expirations, right? There's a right way to do these things and there's a wrong way to do these things. It is time to do it the right way. I have 19 green days. 19 green days and 4 red days. In my past 24 days since July 18th, 19 green days and 4 red days. I have an extremely high win rate. It's above 70% on the green days and also on all my trades with my scalps. So this is a game of just mathematics, of just risk management, of just understanding what you do best. And I know what I do best is scalping. That's what I do best. Some people have different strategies. They hold longer, they go with different, everybody has different strategies. What I do best is scalp like a sniper. I get in, I get out within minutes. There's no such thing as, oh, I sold too soon. No, I did not sell too soon. I aimed for a quick scalp and I got my quick scalp. If it goes against me, I cut the loss even quicker and I could switch sides if I want and make it all back. There's no such thing as I sold too soon. That is not the strategy I'm aiming for. I'm not aiming for a 20, 30, 40% return on the daily. I'm aiming for like a 3 to 5%. If you want to know what I'm aiming for, the goal is 3 to 5%. To achieve that goal, I do not need to take a big position size. I can find a balance with a closer expiration because I'm scalping like a sniper, so it makes sense for me to go with a closer expiration. I time it well. I get my best entries. I scalp like a sniper. I get in, I get out, and I size in accordingly. Even 20%, that's a massive position size. Like I said, on same day expirations, I'm doing 10 to 15%. Now, when this account becomes margin and it's above 25K, the rules will change. I will most likely be taking greater position sizes because I will have unlimited trades. I can just continue to switch sizes, right? I can't take my big position sizes with the cash account because I won't be able to make another trade, right? I could buy a call here at support, but if it reacts as a resistance and I get stopped out, I'm not going to be able to switch to puts and make it all back in bank because I sized in too big or I used up all my trades on the cash count per day. 10% position size per trade, 10 trades per day. 20% position size per day, 20% position size per trade, 5 trades per day, right? So I'm putting you onto the game. Know how many trades you're going to make. Keep your position sizes no greater than 20%. If you want to make 10 trades a day, then you need to stay at 10%. If you want to make 6 to 5 trades a day, then you need to stay at 15 to 20%. If you're a beginner, you should not be doing the max position size at first. Some of you are starting with smaller accounts, so you might have to do that. That's the disadvantage with starting a small amount of money. Ideal amount is $2,000. Lowest I would go is $1,000. $2,000 is a nice balance and a little cushion. $4,000 would be the best amount. $3,000 to $4,000 is very solid, very nice cushion with the 10 to 20% rule. But the contracts I'm trading, they're typically $2. I would say on average they're like $2. Some days they're less, some days there's a little more. But on average, it's like a $2 contract. So $200, $2,000 account, one contract is 10% position size. So in that situation, you can scale. You can add one more contract and get a good average. If your entry isn't initially the best within the first couple of minutes, if you want to scale, that's fine. If you have a $1,000 account, you're not going to be able to scale as good unless you're doing same day expiration. Very tough. You're not going to be able to like scale in and out. You're going to have to take like the full size at first. unless you're doing same days. That's where same days can be very beneficial for small accounts. But even when I scale, it's done very quickly within minutes, and I get stopped out very, very quickly. Like I said, it's all within the entries. It's this little trick, it's this little tweak I do with the candles. When it looks bearish, I wait for it to pop back up, and then I buy in the green candle when people get stopped out and they're selling. So those are some rules. Let me quickly go over this. I'll make a video dedicated to this. Like I said, so how do we prevent the big losses? We went over this. Do not hold for very long periods of time. These are meant to be scalped. So expirations below 2 days are meant to be scalped and held for just a couple of minutes, not for a long time. The DK will hurt these badly if you hold. Never hold past a 30% loss on contracts. That is the max pain to cut the loss. They should be cut between 20 to 30%. Never hold past a 30% loss. If you can't get it right within 30%, you need to get out of the trade. In most cases, the loss should be cut quicker at 20%. Take profits the second the target hits. Do not give it time to react. If you give it time to react, you must have a small position size left of like 30%. If you give it time to react, have a small position size left. Get out on the first green candle. Lock in the gains, right? If it starts reacting against you, do not give back all the profits. Get out of the position completely. If you are up nicely on a trade, if you're up 10, 20, 30%, and you do decide to break these rules and not get out at the target, not get out once it forms a green candle on puts, then you need to understand, if you do not get out when the trade goes break even, green to break even, green to red, you are going to experience a big loss. My biggest losses come from 3 things. Taking a huge position size on a close expiration. And it's crazy because this big loss that occurred, it happened how it always happens, how my big losses tend to happen, like I told you guys. I was up. My portfolio was up over $10,000. The contracts were up 30%. And literally, this is the crazy part. As soon as my target hit, my target on the SPY was right here. I fucking nailed the bottom of this target. And we had people take profits. They stuck to the rules and they did the right thing. And then some people held. Right here, my target was here. I understood that, this is a key target. If SPY holds this, it's going to rapid fire back up. If it cracks this, it's going to rapid fire back down. Now, I was in the same day expiration. That was a mistake. I was trying to, my target was right here. And as soon as it hit my fucking target, the thing bounced quickly and I did not get out. That's why as soon as it hits the target at a key level, you have to just get out. You have to literally get out. That's why I have this platform set up in a way where all I have to do is click a button. It's not a market order. It's a custom limit order that will automatically fill me as soon as I click the button, no matter what happens. If it spikes big, if it goes down big, I will get filled no matter what happens. It's a custom limit order and it's a button. You can do that on Thinkorswim or you could do that on Webull. I'm doing it on Webull with this small cash account, right? I could have gotten out right here, locked into profits. I didn't do it. It was forming higher support right here. It had a breakout. I didn't get out. And that's why I lost big. I held too long. I did not take my profits. And then this is the worst thing you could do. Remember, this is one of the worst things you could do. If you are nicely in the green and you choose not to follow the rules, take profits at key level, take profits on first green candle if you choose to hold longer. If it goes from green to break even and you do not exit, in most cases, you will experience a big loss. If you have a nice trade where you're up 10, 20% and it goes green to break even and you choose to stay in and hold longer, theta decay is going to fuck you. You're most likely going to be wrong about the trend because the trend flipped. You were just up nicely and you gave it all back and you're holding against your profit and you're holding against the trend now because the trend will likely flip. You must stop out. You must stop out. So remember, that's how big losses are created. Not locking in profits, taking massive position sizes with a cash account. If you have a margin account, you can take bigger sizes, but you must know what you're doing. You must be a competent trader. You must be a professional. Even a professional can trade unprofessionally on a bad day, and that could screw you up if you're taking big position sizes in revenge trading. This is why you want to find a good balance as well. Set a goal, find a good balance. If my goal is 3%, why would I need to go all in? Why would I need to go all in if my goal is 3%? What am I aiming for? A 20% return? I know with my scalping strategy, I'm aiming for a 10 to 20% return. So if I size in 20% and I make 10%, that's a 2% return. pretty much one little quick scalp within minutes hits my daily goal. Boom. And I can make multiple trades a day with the cash account until it runs out of cash and the funds will settle the next day, right? Your position sizing needs to be aligned with your goal, and it needs to be aligned with your max risk per trade. How much are you willing to risk on your trade? 3% max drawdown on the trade, right? So align it with those two things. It doesn't make sense for me with the cash account to be taking big sides and going all in. Like I said, you can't do it with a cash account, because the problem is if you go all in and you get stopped out, you can't make another trade. You can't switch sides. You can't make another trade. Your day's fucked up. You can't do it. And there's no reason to do it with the cash account. Consistently compounded small gains. Stop out quickly. Don't hold too long. Know what you're doing. You have a close expiration. It is meant to not be held. In and out within minutes. If you're wrong about the trade, you're wrong about the trade. And you don't have to scale in all at once. You can take 6 to 10%, depending on your account size, at first. If it goes against you a little bit and you still feel like it's going to be in your favor, it still looks like it's going to be in your favor, or even if you're barely up and it looks to be in your favor, then you can add on and get to that max 20% position size. The max position size is 20%. That does not mean that I will be sizing in 20% initially. Initially, like I said, same day expiration, 6 to 10%. 1 day expiration, 10% to 15%. Max position size on a 1 day expiration, 20%. Max position size on a same day expiration, likely less, likely 10 to 15%, right? Just to protect myself with that volatility, because those you have to be extremely careful. You cannot hold those longer, right? And like I said, if I were trading margin, the margin, this would have never happened. It was all because of the cash account. So I broke the rules. If you cannot follow the rules, then you will experience these big losses. This challenge will not be successful. If you are disciplined, if you're a competent trader, if you follow the rules, if you follow the game plan, you should see massive success. You should be rapid fire learning from your mistakes. You should not be losing a lot of money. And if you consistently compound the count, it will snowball into exponential gains. So yeah, this is the game plan. Like I said, those are all the rules. Never let a nice win turn into a loss. If you're up 10% plus and you go break even, automatically stop out, right? This would have all been prevented, man. And you need to, this is key for the scalping strategy. You need to set up buttons. You need to trade on a laptop or trade on a desktop. You need to set up buttons. You need to have buttons set up, a custom limit order set up where you get filled automatically. I'm going to be going over this in Trader Society this weekend. I'm going to show you how to set up the platform with Webull. You can also do it on Thinkorswim. Thinkorswim charges commissions. If you're doing a small account, I would just use Webull. If you want, you can switch over to Thinkorswim as it grows if you want to do that. Commissions are expensive with options. They are. Commissions are very, very expensive on options. People might say, oh, 60 cents, 70 cents a contract, that's nothing. Well, if I'm trading a contract that's $1 and I'm paying 70 cents to get in and 70 cents to get out, whatever it is, that's a 1.40% automatic loss. This is why people need to think of percentages and not dollars. These dollars mean absolutely nothing, right? This is only to determine the position size. We determine the position size with the dollars. This is a game of percents. It's a game of percents. It's a game of compound interest. This is how you do it. If you want to full port your way to the top, be my guest and do it. It's only going to take you so far. All these people full porting and doing all this bullshit, they're taking money out. They're getting big losses. They can't prevent it. They're experiencing big losses. They're pulling money out. I want a strategy where I'm keeping my money in. I want my money working for me. I don't want a huge chunk of my money in a bank account doing nothing but losing interest. I want my money where it's going to grow, and it's going to grow like rapid fire, but in the safest way possible, right? And you do that by compounding the account. Your balance is at, say you grow to $100,000. You go to $100,000. Say you scale back with the position 2%, scaling back at 2%, boom, making $100,000 a month, consistently doing this. This is the game. Have a balance, right? Have a good balance. Have a good balance of everything. Have a good balance of everything with your strategy. Make the tweaks. Learn from your mistakes, right? Doing it this way, you're going to learn so much in a short period of time. And you start making these tweaks, you start mastering this, you're going to see this is the way to do it. I'm telling you, especially with a cash account. And then you'll see some changes. When we get to 25K, when it becomes a margin account, you'll see the changes. There's going to be changes made. You'll see the changes. There's going to be different position sizing. There's going to be some different things made. There's probably going to be more trades made. There's going to be a lot of different things. I'm telling you, a cash account it makes cash accounts, cash accounts, it can make you an incompetent trader if you don't know what you're doing. It holds you back automatically. It does not give you the freedom to do whatever you do, to do whatever you want whenever, to do whatever you want whenever you want. It does not give you that freedom, but there's a strategy and there's a way to do it the right way. And that's what I'm doing, right? Stop trying to get so fast, have patience, compound the account, become obsessed with these nice little 2%, 3% days. These are big percentage days. 2 to 3% is huge. Forget the money. Forget about the money. Oh, I only made $30. Oh, I made $40. Well, do it for 3 months. Then you'll see how much fucking money you're making. It's going to take time. We're doing this the right way. We're not going to full port our way to the top. I showed you. If you break the rules and you full port your way to the top, you're going to experience a great reset. You're going to experience a massive loss. This is a strategy where if you are consistent with it in the long term, it leads to big gains. At first, the dollar gains aren't big. The percentage gains are always big. And if you compound it, the percentage gains are going to turn the dollar gains into massive wins. It starts off with just big percentage gains. 2 to 3% is massive. Then, as time goes on with the compound interest calculator, if you are consistently doing well, dollar gains will become big over time. You keep the money in, do not take it out. Start taking a little bit of money out when it makes sense, but keep compounding the account. Even if you want to take some money out, keep compounding it, keep leaving it in there. Let the wealth grow. I want my money to grow. I don't want my money to sit in the bank. If I'm confident in my abilities as a trader and I have a safe strategy where I can compound my account consistently, why would I want to withdraw money from my account? I can literally use a Thinkorswim account, get a debit card linked to my broker, and if I need to pay an expense or if I need to buy something or whatever, I can take the money out straight from my brokerage account. It doesn't even have to be in my bank account. That is the way it should be. It should be done that way. But if you're just, taking your money out, it really shows. It really shows you're not in the best position to be trading right now. Or, maybe financially you're in a position where you need this money. If you need this money, you shouldn't even be like trading right now. You shouldn't even like be trading unless you're, you have time on the side where you're compounding and you're doing the right thing and you keep it in. But if you need your money to come from just trading, you should not be trading right now. That's just genuinely the truth. You really shouldn't. If you're solely relying on trading as your income right now, you really shouldn't be trading because you're going to take the money out and you're not going to compound the account. That's the reason why I'm telling you, right? And if you're new to this, you don't start with a big amount of money. You start with a small amount of money. There's so much to learn. There's so much to master. You have to gain confidence in your abilities. You have to master this stuff. You can't just start big. You start small and then you turn it into a big amount of money, right? If you start big, that means the money didn't come from trading. It came from somewhere else. And there's no way you're going to master it right off the bat. There's just no way. It takes time to do this. But once you got it, you got it. So those are some of the tips that I wanted to give you guys. Those are some of the things that I wanted to share with you in terms of like beliefs, in terms of like how this should be. You just have to understand with the cash account, it cannot be traded like a margin account above 25K. If you are under 25K, do not use a margin account. You'll be limited to 3 trades. Do not do that. Use a cash account, size in less. If you have above 25K, then you can use a margin account. That is fine. But you need to understand, margin accounts give you all the power in the world. It is a double-edged sword. You can even be a professional, but if you trade unprofessionally that day, that margin account can really screw you over. Sometimes those limitations can be good for you on a bad day. But that's up for you to be disciplined and to be sharp and to be on your game every single day, to be super laser focused and dialed in, right? It's a lot easier to get in and get out very, very quickly than it's to hold, in my opinion. And what I'm doing, I'm finding this very simple. Scalp like a sniper. I'm loving it. The compounded gains are adding up exponentially. And you can call it whenever you want to call it on the day. I'm gonna keep pushing it, but I'm gonna trade the best setups at the best price. But I'm gonna keep pushing it, man. I'm gonna keep pushing it. And I'm gonna scale this account. The goal is to average at least 3% daily. Some days are gonna be bigger. Some days are gonna be like 2%, and then some days will be red days. But like I said, 19 green days, 6 red days. The portfolio is on point. The win rate's high. The green days are high. The trade win rate's high. The profits are great. Everything's good. In terms of the big loss, it came from holding a same expiration. I broke that rule. not taking profits. I broke that rule. I was up. The account was over 10K. Not the point though, because I was up. I was still doing the wrong thing and full porting a cash account. So the position size was too big. Like I said, max position size 20%. And I held the same day expiration. So what are the rules? Do not hold the same day expirations. Do not put in your entire account 20% position size max. And you shouldn't put in 20% at first. You should kind of scale into it by the minutes. And I explained to you, the game plan. So the position sizing, the goals. My goal is to have a trading win rate of 67% plus. On average, I want to have 7 green days out of every 10 days. On green days, I'm aiming for a minimum 3% return on portfolio, right? So that's an average. Some days it's going to be a little bit less. Today was 1.50%. Some days it's going to be a little bit more. Some days it's going to be 5% plus. I could be doing 20% on 5 trades. They could be all green trades, and they could be like 10% gainers. That's a 10% return on the day. Massive returns with a couple trades, no big position size. Why do I need? Ask yourself, why do I need to put my entire portfolio into a trade when I could just do this? And like I said, with a cash account, do not full port. The reason why is you're limited to 1 trade a day. If you put your entire portfolio into 1 trade, guess what? You have to wait for that cash to settle next day. You can't make another trade. That is a severe disadvantage. That will make you an incompetent trader if you are limited to 1 trade a day. If you are limited to 3 trades every 5 days using a margin account under 25K, that will make you an incompetent trader. I understand limitations are good for people who don't know what the fuck they're doing. But if you know what you're doing, you're educated, you're disciplined, you're learning from your mistakes, right? You don't even need to know what you're doing. If you're just doing 1 contract and you have no fucking clue what you're doing, I still think it's a disadvantage for them not to be able to make as many trades as they want, because that's how you learn. You learn by just doing 1 contract, and you learn by entering the trades, by taking the positions, not by sizing big. You take a big position size, you now learned what not to do, right? You learn through these things. So it's just, you have to be disciplined though, because like I said, these are the rules, these are the plan. It's gonna work. That doesn't mean that one day I might be unprofessional and I might fuck up, right? This is why you must implement this. You must become disciplined. You must be self-sufficient. You cannot if you see me entering a full port, you should be like, what the fuck is he doing on a cash account, right? And you should not do that. But if you think it's a good trade and you like it, then take 10, 20%, completely fine, right? You must be competent. You must be self-aware. I'm going to lay everything out for you. It is up to you. And I will try my best to do everything and lead everything in the right direction. But at the end of the day, we all have off days. But I'm going to try my best to not break these rules and to keep it. It's very simple. Just don't go above 20% on the sizing. As long as I don't take big position size on the cash account, I personally think over time, this will grow massively. I've done it before. I'm going to do it again. So yeah, that's the style. That's the plan. So those are all the plans. Just to quickly recap, and the video's coming soon. Your account balance is under 25K. Use a cash account. I would only recommend Webull or TD Ameritrade because of the platforms. That is the reason why. Webull has no commissions. Great for smaller accounts. TD Ameritrade, commissions are very, very high with options. I showed you percentage-wise, very high with options. May not seem a lot, 70%, 70 cents a contract. Oh, that's a lot. Trust me, if you're trading cheap contracts, that's a lot of fucking percentage returns being taken away. You're instantly down like 1.40%, whatever the math is, right? You could do the math. That's a lot. So I'd recommend just Webull. Not sponsored by them. There's no affiliate code. There's no ads. I don't need money. I have enough money. I don't need it. So yeah, I'm just recommending them because that's what I genuinely believe is the way to grow a cash account. I've looked at every broker. They are the most competent broker for my trading style. Keyword, my trading style, where I push a button, I get filled. I push another button, I get filled. I will be 10 steps ahead of everybody else. While they're pre-filling out their orders, while they're, typing everything in, confirmations, all this, I have all order confirmations disabled. The moment I click that button, I will be filled no matter what happens. If it has a big spike, I'm filled. If it has a big down draw, I'm filled. It's a custom special order. I'm going to be going over everything within Trader Society. This challenge will not work if you don't have a cash account with the proper platform set up. It must be on a laptop or a desktop. We're not trading on our fucking phones anymore. And we're going to be scalping options like a sniper in and out within minutes. This challenge also works with the margin account if it's above 25K. If you are under 25K, use a cash account with Webull or TD Ameritrade. The minimum is $1,000. $2,000 to $3,000 is an ideal price, and $4,000 would be the best price. Trading style, and like I said, if you don't have this, it's best to save up. It's going to take you a lot longer to grow. If you start smaller, it's best to figure out how to make, how to save a quick $1,000 over the next 1 to 2 months, 3 months, whatever side hustle you have to do. Start researching. Like, you're going to want to start with a little nice amount of money, so you have a cushion, so you have a much better chance. So it's a decent amount of time. I mean, there's a big difference if you start with $1,000, 3% over the next 6 months. Let's see how life changing is that going to be. At $50,000, I mean, that's amazing. But if you would have just started with $2,000, it's now $100,000. So you do the numbers. Figure out what number makes sense for your situation. I don't know your financial situation, but anybody can do this. You might not be able to do it right away because you're your financial situation and maybe you don't have the time. But there's going to be trades during every time period of the day. Another rule that I'm making is avoid the open. Look, guys, the market open, it's too unpredictable. It's too flip-floppy. It's too volatile. The high volatility and high flip-floppy means big losses overall, especially if you're not getting the best entries. It's hard to control a loss. It's typically a bigger loss in that situation, and I don't want that. So let's trade ideally past 10 a.m. I'm going to start trading past 10 a.m. There's going to be trading opportunities during the middle of the day, past 10 a.m., middle of the day, power hour. There's going to be a lot of opportunities. We're going to be scalping. You'll see it's like a different approach where you can enter, decent amount of trades. And yeah, this is, so we went over a lot of stuff. There's going to be a video soon, and that's going to be it. Thank you guys so much for tuning in. If you want to be a part of it, it's the first link down below in the description.